Hello and welcome to this special presentation, How to Find the Best Searches. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I am super excited about this week's presentation because one of the most common questions I've ever had to address at any seminar or event that I've ever taught is, Steve, you guys have a lot of strategies in VectorVest. Which one is the best for me right now? And of course, that's a loaded question, right? Because while we know some searches that just tend to perform well, turn after turn after turn, certainly searches also can fall in and out of favor. And so what I want to do today is put that question to bed and put it to rest for good. And so I've developed a process that's going to enable you to be able to find the best searches for you very quickly. And when you see what it can do for you and the kind of useful information it can produce and produce quickly, that is going to become a no-brainer. Because if you want the answer to the problem, which is what is the best search for me right now, the solution is easiest found and successfully found in the Derby application. So let's take a look at the process. The first step of the process is to choose your market timing system. Now here's what I suggest. I suggest opening a 3-month market timing graph to determine which timing model has produced the most reliable entry and exit signals, always favoring the quicker signals when possible. Then what we want to do is write those dates down for each up wave, both the entry and the exit. Down waves as well if you want to try to play both directions as part of your outcome. So let's do that. Let's move over to VectorVest right now. So here we are at the home page for VectorVest. I'm going to go right to the timing tab and I'm going to click right on market timing graph. So now we have it loaded up, and what I'm going to do is dial into the most recent 3 months for a number of factors. One, what matters here more recently tends to be more productive on our near-term outcomes once we start using this information to invest in the stock market. And two, the Derby looks at the last 90 days of activity, the last 3 months of activity. And so that's all the data that we can factor into the tests. But now that we know why we selected the 3 months, now we need to go about picking the best timer. And so what you want to do, since clearly we can see the market here has fallen, risen, fallen, it goes up, goes down, it goes up again. What we want to try to do is select a timer that's going to get us in as close to these bottoms as possible and get us out as close to these tops or peaks as possible. Because that's where the money is. That's where the money is. And so what I'm going to do is just quickly demonstrate, if we choose something like the confirm calls, you're going to come out just fine over the long run. But we can see that during periods of market volatility, it's a little bit more susceptible to some of these bumps and wiggles and getting on the wrong side for just a little bit. Eventually, when the market takes off and runs, it's going to be your best buddy. But if we come down here to the bottom and go to the primary wave, here we can see where are the green triangles in relation to the market bottom. Most of them are right at the bottom. Yeah, that's where you want to be. That's where you want to get your signal it's time to buy, because that's where the money is. When we look at the red triangles, they're giving us opportunity at fairly high prices with some whipsawing, but that's okay, to lock in profits very nicely. And if we go back and look at even more history, you'll see even more evidence of that. It does a really good job at being very nimble and preventing, catastrophic loss very quickly. So this is a great little timing model and has really proven itself over the course of this year, as it has every year. But if we go back to the 3 months, the main reason for choosing it is that in looking at this 3-month graph, it reaffirms that point to me that it's going to get you in very close to the market bottom. That's where the money is, and it's going to do a good job of telling us, hey, a little bit of trouble's brewing here. let's take those profits and move on. All right, so what I did then was I said, all right, I'm going to write down all these dates, 4-4 to 4-6, 4-9 to 4-12, 5-7 to 5-29, and so on for each of the 6 signals. If I was going to build a trading system that incorporated the downs, I would have done the same for each of these downs. Okay, but clearly the market has an upward bias at this stage, so I just simply focused on only looking at the up situations for the moment. So after writing those down, what, pray tell, did I do next? Well, let's show you. I'm going to go back to the process. Our next step is to start isolating the searches. What search is the best for me right now, Steve? Well, let's go about finding out. And so step 1 is to use both the buy and hold and the day trading modes in the Derby to test each up wave over the past 3 months. Down waves also, if you want to play both directions. Our goal is to come up with 3 to 5 searches that consistently produce strong performance in every up wave. And so what we're going to do is start with a list of about 20 searches, and then we're going to start isolating and working forward. So on the first run from 4-4 to 4-6, we'll try to get 20-25 searches in there. And then as we go forward and test the next wave, which was 4-9 to 4-12, and then 4-13 to 4-23, as we keep going through the waves, we're going to keep reducing the amount of searches that we're still looking for, because we want to walk away with the 3 to 5 searches that perform well in each of the up waves. Not necessarily the top of every list, but in the top batch, in the top of the list. And so that was the first thing that I did, was test each of the up waves with the 2 different modes. And so let's move over into VectorVest and begin to take a look at this. So I'm going to go ahead and close this out of the market timing graph. And now what we're going to do is move right into the Derby. There is a tremendous amount of information, useful information, mind you, that you can get from the Derby analysis modes. Now I'm going to do a little explanation of the modes as we go through this video. But I will also tell you there is a tremendous resource up here at the top left, or top right rather, under Help, that says Derby Quick Start Guide. So if I click that and scroll down a bit, it's a wonderful little guide, and it will, as you get deeper into the document, walk you through the different analysis modes. Today's Derby, for example, give you all the pertinent and most important details. If we keep going here, we'll have day trading mode, which is one of the modes that we'll be using in this testing. Essentially, the day trading mode is how well does a search do from open to close each day in a succession of days. So it's a cumulative result. Open to close day 1, open to close day 2, open to close day 3, and it's cumulative. If we move on to the next one, buy and hold, this is where we're going to start. This is like a quick test. It measures performance from the start of the test, so the open on 4-4 to the close on 4-6 for each search. And so we're slicing and dicing the searches a couple of ways. The buy and hold is important to isolate searches that perform well over the entire span of each upwave. The day trading, the reason I chose to do that was I wanted, occasionally you're going to have to sell a stock, right? You're going to have to sell a stock at a target gain or a target loss, because we're going to be using stop losses. And so when I replace and get new blood in there, I wanted to make sure not just did these searches do well from point to point, but did they do well day in and day out? So that's your day trading mode. And so the final one that we're going to use is called Vary the Start Date. There's a beautiful little graphic in the middle of the screen here, and this will be the second point on the slide that we were looking at earlier. But this will be the final test. This will be kind of the acid test in a way, in that I wanted to make sure that over the entire last 90 days or so, well, at least back to April the 4th, that if I used this strategy any day from April the 4th to the current day, that it did well. you know? And so day after day after day, if I would have just bought and held them to today, how well did the searches do? And I want the ones that do well most days, if not every day, is the main goal, right? So no matter what day I pick them, stocks go up. I mean, that is the acid test if there is one. So vary the start date's a very powerful mode. So let's go take a look at these three modes. All right, so I'm going to come into the Derby. We're going to start on buy and hold. And again, this is really nothing more than a quick test. You know, your data might be a little different because we're going to go from market open to a close versus a close to close for you end of day users, right? So a little bit more realistic even in terms of kind of the result that you get. But I'm going to go back, and our first date is going to be 4/4 to 4/6. Remember, that was the first date on the market timing graph. And so we'll plug in our dates here. And there's bottom fishing and rising industries right at the top. And so for those of you that haven't seen the Derby before, that would be as if you would have gone out and run a quick test from Unisearch on bottom fishing and rising industries and got, you know, here's the stocks and here's your overall gain loss. That's your 7.03, okay? Inside, here are the stocks that contributed to the 7.03% positive return on investment, okay? And that would be, in a big way, Link Motion and Net Element and Unit Corp. Okay, but you can see all the stocks did pretty well. So we're off to a good start with bottom fishing and rising industries. A couple that I want you to pay attention to, because I've already done the work, would be this S&P 600 small cap. This is one that's going to test well turn after turn after turn, particularly early and late in the test bed. And if we look at, here's Show Me the Money Long, which was in the top 20. And so that's why I used a pretty broad swath on the initial batch that I wanted to kind of keep in my memory and keep logged as I go through the testing. Is this little guy didn't start as strong as some of the other ones, but boy, does this little guy get cooking as we get deeper into the turns. And so, you know, this is the benefit part of me having done some of the work for us here. But I still want to give you a feel for this work because this is the kind of thing you want to think about doing in the future, okay? So here, again, this is a strategy that performed well not only in this turn, but in future turns. And not only did I test the buy and hold mode, which shows you the point-to-point performance for each turn, and I did that for each of the 6 turns, okay, and looked for matches. I also did day trading, and the reason is quite simple. And I think I alluded to this already, but I just wanted to make sure that, you know, along the way, we're going to cut losers and cut winners and pick up new positions. You want to make sure that the search is not a one-day wonder, you know, that it tends to pick good stocks each and every single day. So day trading mode looks at open to close each day, and it's cumulative, as I explained. And so if we look at the test, we can see a little equity curve here, and Show Me the Money Long is right at the top of this list, you know? And so from a cumulative standpoint, from a day in, day out trading standpoint, Show Me the Money Long is the best one over this little 3-day period. Look who's number 2, S&P 600 small cap. And those were the 2 that I showed you from the buy. So hopefully you're beginning to see what I've done here in the overlap of data that occurred looking for matches. And so I did that for each and every single turn. So if we just skip forward to sort of more towards the end, just for sake of time here and benefit of time, let me go forward. And the last one that I tested was 6/1 to 6/13. And here's your S&P 600 small cap again. Here's your Show Me the Money Long. And while they're not at the top of the list, they were consistent. They were very consistent all the way through. And this was on the day trading mode here. And so in the culmination of all this work, what I walked away with were a few searches. I walked away with Show Me the Money Long. I walked away with Angel's Wings, S&P 600 small cap, Seattle Bear Beaters, just to name a few. And what I decided to do next was that acid test with vary the start date. So what I did was, and this is really good stuff here, guys, if we come to the top and I click on vary the start date, I can then utilize the last 3 months I'm just going to go back to April 4th, which was the first up wave that was testable here. So we'll just go from April the 4th to June 13th. But you get the picture. That's a lot of days to run quick tests on, man. I mean, the answer here is, are you going to do the work? The answer is no. Let the Derby do the work for you. You know, that's a lot of tests, because if I open it, like, look, and here's Seattle Bear Beaters again, okay? The most robust search day in, day out, from buying it any day in the past over the last 3 months or so to back to April 4th anyway, and holding each campaign all the way to the current time, which was June 13th when I did the testing. So, you know, it was buy and hold April 4th to 6/13, buy and hold April 5th to 6/13, buy and hold April 6th to 6/13, and so on. So for each search, look at all these tests. You know, 10 stocks in each basket, 70% winners, nearly 60% return from April 4th to 6/13. If we look at April 5th to 6/13, 90% winners, 63%. And as we look down the list, look at how many winners this guy's picking day after day, and how long. You know, without something like the Derby, how would you ever know that Seattle Bear Beaters has been the best strategy recently, right? As far as picking winners anyway, maybe not so much the overall gain loss, but in terms of picking winners. But the reality is also in gain loss, because the average result of all that test is 42%. Pretty cool. And then if we look at show me the money long, there it is, right near the top, right up there with the cream of the crop over the last 3 months. And follow the money was one that I tested. It showed pretty well, but didn't do as well when we get to the next phase, along with Angel's Wings and some others. But S&P Stop Ascending did really quite well, tended to bring back a positive result on each test. And while it didn't blow the doors off, it was very consistent. And so we took that one to the next level. And Smooth Comfort was another one that just blew me away. You know, that was the one that was really surprising in terms of the number of winners that it was finding just day after day after day after day. Look at that, 99. Now, you don't see a lot of turnover in terms of what stocks that something like a Smooth Comfort finds, because it deals mostly with your high CI stocks, right? Which are great stocks, strong price growth, persistence, the whole bit. But, you know, just even as you get deeper into the test, occasionally 100% winners, you know, 70. So this was just jaw-dropping in terms of, this is not a strategy that I would think rationally I would want to pair with something like the primary wave, because the primary wave is so fast. Yet it is one of the better choices, and I would never in a million years would have come across that without the Derby. And so that's the power of what we're dealing with here. And I think something that's often overlooked is how powerful the Derby really is. You know, this little stuff that we're doing right here, we used to package up and sell in a program called the Simulator, which was a couple $1,000, actually more than a couple $1,000. And the Derby does it all right here, and does it without you even having to click very many buttons. You know, it's really, really good stuff, and a lot of important data to look at. So in the end, guys, what I walked away with was about, I walked away with about 5 strategies when everything was said and done. But there were some strategies that I went ahead and tested just to see, and it was like Angel's Wings and some others, and I kind of know a little bit about those to begin with, but yeah, they just didn't carry over to the back test as well as I would have liked to seen. So I'm just going to give you the answers here in a minute. But what I did was I went on to the next step, and so let's talk about it. So the next logical step here is to take the 3 to 5 favorites that we have and move them over to Backtester to test those searches and see how they do in a more realistic setting using money management tactics over that same 3 months. Our pro tip here is to favor tighter stops on faster timing signals. So it doesn't make sense to use 100% target on a stop loss when your average length from from start to finish in a campaign is going to be 7 to 10 days. Maybe you're going to get one or two that fly that high, but you'll be, lucky if you do in many respects. So, we didn't even use 50-15. I went down to 28-7, and I did that for a couple of reasons. One, I just know by nature of the timer that even getting to 28% is a pretty big move in 7 to 10 days. And if they do, I'm willing to take it. And, I'm not going to sit here and watch a stock go down 15% over 7 to 10 days either. That's pretty nasty. So it just makes more sense. The other thing I would say is it was a setting for Profit Locker that was the top. It was in the top several best back tests that our Derby members put together. It was a number that just kept surfacing to the top of our Derby competition. So just using all that information, we learn as we get better all the time, guys. And as we learn all this information, we got to remember to put it to use, right? So that's what I did here. But let me go and show you some of the result. So what I'm going to do is transition over to Backtester, because we want to take these hot strategies and we want to put them to the test. And so here they are at the top. We got a little different flavor in here, which is great too. We got some large cap, we got some small cap, we got some some bear beaters. We got Show Me the Money Long is very much a small cap search. We got some high CI, different flavors of stocks here all the way around, which is nice. And then we test them out and we see what we get, right? So if I look at this first one here, S&P 500 stop ascending, all these tests were run from 4.4 to 6.12. Okay, 4.4 to 6.12. And look at the number of winners. I mean, every single one of them over 50%, which is not a small feat, honestly, with such a fast timing model that we're using here. And on top of that, good results in terms of ROI or gain loss for the campaigns. And if we look at the commissions, of course, we'll take that if we're making good percentages per year, right? So really some of the more important numbers here are going to be like your max drawdown. How livable is the strategy? Now, this is a quick, short time frame that we're testing here. So certainly, these tolerances may climb a bit in the future. Hard to say, but they're reasonable right now. And so that's the important thing, And when we look at our compounded rates of return, look at some of these suckers, really, really good percentages here. So let's look at the curves, and then I'll explain what's under the hood. But let's look at the curves first. We'll start with the large cap S&P 500 caliber stocks. So what I did was I used the S&P 500 stop ascending search, bought 10 stocks, used a 28.7 profit locker, and when we got an up call, we bought them. When we got a down call, we sold them. This was a quick reversal here. So we bought 10 more and we sold them. Okay, we bought 10 more and we sold them, and we just kept doing that. And as the more robust signal comes, it really begins to pay off. And you might say, well, why did you keep doing it back here? Because if you were trading that in real time, you wouldn't know that the signals were going to reverse before they did, right? Anybody got that crystal ball in their hand? Okay. So, what you want to do is factor some of that in, because that is going to happen in the future. That is going to happen. So it even happened here, right? So how well do they hold up if that does happen again? Is kind of the mentality here. So very, very strong performance, guys. That's the main thing I want to drive at. 7%. It's not doing too bad with large caps. It really is not. So if we go to the next one, which is your small cap, you might expect some more volatility and some higher potential returns, right? So when we look, that's exactly what we get, except, quite honestly, this one really was a pretty good runner all the way through, because, never went underwater, and it's going to sag a bit more than your large caps typically when the market turns nasty. So that doesn't surprise me to see. But when it's cooking, man, it's really cooking, and to the tune of 18%. Okay, let's go to the next one. Let's look at Seattle Bear Beaters. This is one that was surprising to me. It didn't fare well under the volatility circumstances, but it held in there. It never got in serious trouble. Now, some of that is we went to cash, right? So these stocks seem to need a little bit more room to run. But when you get it, it's a hot strategy. It's doing well. So if you get good runs in the market here going forward, Seattle Bear Beaters ought to be pretty kind to you. you know. And so let's minimize this. Let's look at the next one, which was show me the money long. I mean, this is one that has been winning a number of, or placing very strongly in a number of internal and external competitions, you know, and doing really well. And when you look at the performance here, it should be no surprise because we've seen it, but 19.2%, okay, very strong. If we go here to Smooth Comfort, this is the one again that just kind of blew me away, you know. One of the strategies that if I was just doing this blind and not using the derby, I never even would have tested Smooth Comfort. I'll be quite honest with you, and it wouldn't have happened because it just doesn't seem to make sense to me. But who cares if it makes sense? Because the reality is, when you think about, I'm probably wrong, right? Because when you think about Smooth Comfort, you're talking about high CI stocks. You're talking about stocks that persistently go up, right? So it's in some ways exactly what you want to find, right? So Smooth Comfort, you know, does really, really well, and just as solid an equity curve through a lot of the noise that we've had here over the last several months back to April. You know, it fared very well, and so that's another one that should definitely be considered as a strategy to think about right now. There's no doubt about it. And so the inevitable question, or two questions, become now, all right, Steve, what else was in your test? And two, what would I do from here? And so let's start with what was under the hood. And then we'll talk about what do we do with these tests to start putting them into action. Okay, so what I'm going to do is just click on Smooth Comfort and go to Edit. I did a universal money management system across every search, and it was very simple stuff. So I don't want to try to make this too complicated. I'm just going to come down here to the bottom, click on Customize Trading System just to show you the money management tactics. So we talked about using the primary wave, which we did. On up waves, we bought stocks. On down waves, we went to cash. All right. So on the up waves, what we did was we bought with Smooth Comfort. And let's define that some more. So when I click on this, it'll show you Smooth Comfort. We used Profit Locker 28.7 as I described. Okay. Under more settings, the only thing that I changed, we did 10 stocks, all the normal default settings here, really. All I did was don't repurchase the same stock for 31 days. And to be quite honest, I didn't even test not without that setting. And the reason is because that has also been a common recipe, particularly with small caps, which a number of these strategies were, that you don't want to buy into a loser that you've had again, you know, and you don't necessarily want to keep buying the winner either. Sometimes it's great, sometimes it's not. So this is just trying to make sure that every time we get a stock in there, it's new blood. Okay, new blood that can run and do some good for us. So that's it. You know, that's all. On down, it's just choose the go to cash up here at the top. You know, so very simple. And then the next question becomes, all right, what would I do with some of this testing from here forward? And I'd say, well, the answer is simple. What you want to do is convert them to a portfolio. And so if we look at the final piece of my process, it's to use the Genius portfolios to monitor future performance. Convert your favorite backtests into portfolios and turn the Genius on to monitor the future performance until you're ready to start trading them. Okay, and maybe more than one, right? So let's go ahead and do that. So I'm going to come right back to our test, and it's real simple, guys. You just right click, convert to portfolio, and we're going to convert it from the end of the test because that trading system has matured. You know, it's gone through the testing, it's matured, and let's turn it loose and see how it does going forward. As an alternative to that, you could wait for the next primary up wave and then start with an empty portfolio and get a fresh set of stocks. But eventually that's going to happen to this one. Let's just go with what's working, see how it does. So continue from the end of the test, click on OK, and I'll open it later because I'm going to do it again. I'm going to go to another one that we really like, which was Show Me the Money Long. I mean, you know, these are the top performers down here, the Smooth Comfort, Show Me the Money, and Seattle Bear Beaters, right? Along with the small cap. So what we can do is just do each one of them. Let's convert to portfolio, continue from the end of the test, click on OK, open it later, right click, convert to portfolio, end of the test, open it later, and convert to portfolio, continue from the end of the test, open it later. And why not even the large cap? Because, you know, it'd be good to have a little mix of large cap in our portfolios too, right? So we'll click OK, and now we'll open it up. And then we can monitor these right here in portfolios going forward. So we'll have S&P 500, the 6 cap. I've done this a couple of times, but you get the point. You'll have the Seattle Bear Beater and the Show Me the Money and all of the different models that were successful. And they were successful because we leveraged the useful data from the Derby. And what this will do is get us off into a position where we're dealing with some pretty mature trading systems. And let's see how they do going forward. And when we're convinced that we're onto something here, if we're not already, then we'll go ahead and start trading them with real dollars. That's the way to go. That's where we're all headed, right? So hopefully this raises some eyebrows for you guys out there. Hopefully I'm getting some juices flowing and getting you thinking about things, particularly those of you that have the Derby already. You ought to be making use of this information. I'm talking to all my Jockey Club people out there right now, right? The other thing I would say is if you're not a member of the Derby or the Jockey Club, and after today you want to be, you should, because we have a ball. It's a great opportunity, to at least get the Derby, get some useful data at your fingertips. And so let me show you. I mean, in the views today, in the strategy section, you're going to have a link that'll say try the Derby for just $29. And what a deal. It's less than $1 a day. So I think it's worth the investment just to kind of poke around in here and see what we did. And it's going to take you out to a website. And all you got to do is fill it out. You'll get 30-day trial access, full access to both real-time and the Derby, which is a $228 value, all for just $29. It also includes a lot more benefit, of which I'm not going to get into. One thing we already mentioned, and that's access to the coaching from some of our top instructors for less than $1 a day for 2.5 hours. I mean, you want to talk about insanity. This is a deal you can't pass up. So hopefully I've made that sort of a no-brainer for everyone. And I'd just like to close out and say this, if you have any questions, needs any help, just feel free to give us a call. We're always here for you. And thanks for being a VectorVest subscriber. We'll see you right back here next week for your next special presentation. Have a good weekend.